In this video, I will walk you through this textbook setup using the statistical mapping indicators. For this, let's go back to yesterday's close and look at the daily time frame. As you can see, we had this swing low taken out last Wednesday, following with 2 consecutive up-close candles, and the third candle left a bullish fair value gap open. This means we have some momentum to the upside. Ideally, I would like to see price trading into that gap and from there continue trading higher. From here, we can already drop down on lower time frame. In this case, I'm choosing the 15-minute time frame. Keep in mind, this is our higher time frame POI, in this case, the bullish daily fair value gap. And now we can turn on the OHLC StatMap and we can turn on the statistical volatility indicator as well. We already established a bullish bias. That means our focus is on the bullish manipulation level and the bullish distribution level. Why? That is because on bullish days, the low of the day statistically forms around this price level and the high of the day around this price level. Now we would like to see, can we add further confluences to those levels? So we look to the left of it and see if we can find something around these levels. Zooming further in, we see we have this swing low very close to the manipulation level, and we also have this liquidity pool which further adds to the idea. Same goes up there. We have this liquidity pool lining up or in close proximity to this distribution level. Now that we have our 2 POIs established, we can look at the statistical volatility indicator. It acts as a heat map to see where we can expect volatility. In this case, it's very obvious at 9:30 to around 11 and continuing volatility until market close at 4 p.m. So let's jump forward to that time. I will mark that out here. There we go. As we can see, price reached for that level, but we didn't trade below it, which means these are perfectly equal lows, which makes that a higher probable liquidity pool. Right now we're trading in the New York AM session, so we can also, for further confluence, add that 8:30 to 11 session, and we can see we also have the manipulation level, once again in close proximity to this liquidity pool and the bullish daily manipulation level. So we have 3 confluences on why price could reverse around this level. Let's see what happens at market open. Price drops down into that. Let's go on the 5-minute time frame. Once again, as you can see, we are now also trading in that volatility time session. Let's remove this for now, just to make the chart a little more appealing. We can see we had this bearish fair value gap. Now we are waiting for price to close above this level, so this can act as an inversion level for price to trade higher. So far, no close above. And there we go. We've closed above this level, which means this is now an inversion level. For this demonstration, let's add 2 positions here. I will scale one off at the opposite manipulation level, and I will hold the rest for that liquidity pool with that distribution level. Oops, I missed to take profit there. Let's just still do it. I would have taken profit at this level. Price chopped a little around the lunch hour, had a small retracement, and then continued trading higher into that liquidity pool we mentioned at the beginning of this video, which would be our final take profit. This trade would have offered up to 3.8R, which is a very nice setup. If you have any questions, please let me know, and see you next time.